Hello there. Welcome back to Cost and Management Accounting in 5. In this video, we want to look at question 6 of the question paper of November 2023. This is the last question of that question paper. So we are going to look at missing figures, whereby we are going to calculate missing figures from A to G. So the question is the following information was extracted from the records of Manuel CC on 31 August 2021. The predetermined recovery rate for all overheads is 17 Rand 50 labor hour. Then we're given a table with column for direct labor, manufacturing overheads incurred, manufacturing overheads applied, over and under applied overhead. So what it means is when it's over, it's going to be a positive figure. When it's under, it's going to give us a negative figure since we put under in our brackets. So this is what we have. So we're going to start with A, but as you see, we are going to see that to find our column for over or under applied overheads, we are going to say actual minus, we're going to say actual by actual. Let's just try to see. Here we are going to say actual minus applied. So this is what we have. So get our B, we are going to say 650,000 rands minus A, then we get our B. But first of all, we have to find our A. So to find our A, as manufacturing overheads applied, we're going to say at the rate that we have the labor hour times the number of labor hours, then it give us the manufacturing overheads applied. So as simple as that. So this is what we're going to do on A. So we're going to say 750 times 35,000. So here for our A, we are going to say 750 times the number of direct labor hours, which is 35,000. So if you calculate that one, we are going to get 612,500. So here we've got 612,500. So this is what we have according to our A. Then we can try to see what we have on B. So remember, we've got a formula that we devised there by saying to find our B, we are saying actual minus applied. So basically, this is our actual, and this is our applied. So we're going to say actual minus applied, then we get our B. So we say 615,000 minus the figure that we got there for A, and then we get our B. So basically, we are saying 615,000. We are now on B. 615,000 rands. Then we subtract the figure that we got for B, which is 612,500. So if you calculate that, you see that this one is greater than the first figure that we have is greater than the second one. So it means it's going to be a positive. So we've got a positive 2,400, which indicates it's an over according to the description that we're given there. So this is our B. Then we can check on our C now. Right, on our C, we are here saying direct labor hours. So our direct labor hours is here. But remember, we get our applied overheads. We say rate per hour times direct labor hours. Rate per hour times direct labor hours. So we get our manufacturing overheads applied. So so what we are going to do is so it means in this scenario, we cannot get our C because we only have our rate, and then we don't have our applied overhead. So we can don't get our, so we can first find our D, then we find our C. So let's first calculate D. So D is simple to calculate here because we've got a formula that say actual minus applied equal to over or under applied overhead. So we are going to say as 295,400 rands minus D is equal to negative 7,500. So this is what we are going to do here. So basically, we are saying we are first of all finding our D. We are saying 495,000 rands, 400, and then we subtract our D. We get our negative 7,500. So this is what we have. So we can take this figure to the other side so that we are left with negative D. This one side, in this one we change it. It comes the other side changes the sign, so it becomes negative 7,500, and we subtract again And this one, it has changed sign to 295,400. So this is what we have. So we calculate as such. I would see that you are going to get D. You are going to get D is equals to 302 negative D equal to 3 negative 302,900. And obviously, in this case, we can divide by negative 1 both sides so that they become positive. And then having done that, it means our D now becomes 302, 300,000, 202,900. So this is our D. So if we can identify our D, we can now find our C. So to find our C now, we are now saying, we are now using the formula of saying 17 rand 50 times C is equal to our D. So we are saying 17 rand 50. This is now calculation of C, 17 rand 50. 17 rand 50, then we multiply by our C is equals to D. We multiply by our C. So you're saying times C equal to our D is this one, which is 302,900. So this is what we have. So we can just make C the sum of the formula there by saying dividing by 750 both sides. So you're going to say 302,900. Then we divide by 17 rand 50. So as such, you can just calculate it as such. And then if you do that, you can now get your C. So if you divide there, you're going to get 17,309. 17,309. So these are number of labor hours. So we are trying to find C. So remember, C is direct labor hours. So our answer obviously is going to be in hours. So our C is 17,309 hours. So this is what we have for C. Then we're going to move on. Now we've got C, we've got our D. We can move on to E. Then on E, we are given that manufacturing overheads incurred is one that we need on E. We are here now on E. But to find E, remember we've got a formula that says manufacturing overheads incurred minus manufacturing overheads applied will give us the variance then. So we cannot find because we've got two unknowns here. So we have to first of all find our F, manufacturing overheads applied. Remember, to find our manufacturing overheads applied, we say the rate times the number of hours So we're going to say 17 rand 50 times 18,000, then we can get our F. So let's start by finding our F. Our F, we are saying the rate is 17 rand 50, and then we multiply by the number of hours. Let's just recheck the number of hours. We have 18,000 times 18,000. Then we can find our F. So if you multiply there, you get 315,000. So this is our F. Then we can go back now to find our E now. Now we are saying E minus 315,000, you get your variance of a positive 4,000. So we are saying now our E, let's try to see there. We are saying the value that we have there, which is our E minus our F. So we are saying our E is the one that we are looking for. Then we subtract 315,000 to get your variance there, which is 4,000. So you can say 4,000. It's a positive 4,000. So we say 4,000 is a positive. Then to get our E, we are now saying it's equal to to get our E, we are now saying it's equal to 4,000. Then we take 315 the other side, it becomes positive plus 315,000. Then our E becomes 319,000. So this is what we have according to E. So it means now we've got our E, we've got our F. So we are left with our G. So to find our G, remember we say this one minus this one, which is manufacturing overhead minus manufacturing overhead applied to give us this one. So we see that we've got a positive 1,000 there. So we are saying G minus 192,500, then you get your 1,000. So we are going to say G, G minus 192,500. Then we get the difference that we have there, which is 1,000, positive 1,000. So we again get 1,000. Then we can make some of the formula whereby now we're saying 1,000. This one, because the other side and becomes positive, 192,500. So basically G is equals to 193,500. So this is what we have according to G. So this marks the end of our question. Hopefully this video was helpful. Those who haven't subscribed, please subscribe and say we're still coming with more videos as we prepare for exams. As for this video, I'm signing out. We'll meet again in the next video.